Good afternoon and welcome to the Avid Trading Community Discord. I'm going to give you a quick breakdown on the trade we took today on SPX, 0-day expiration puts, give you a little breakdown into my thought process, why we entered the trade so you could understand it, you could apply it yourself in the future so you could set yourself up to be a more consistent, profitable trader in our group. Now, before we actually talk about the underlying contract here, I want to go back to the Discord and always want to pay attention to the analysis page. We talk about this very thoroughly. This is chart breakdown, setups, real-time trade ideas. So when we saw SPX setup here, this was an entry point for our puts. And what did we notice? We only had about 2 hours of trading, as you could see below, right? This was maybe 11:20, 11:30 here. So we had maybe 2 hours or less of price action. This is an intraday, very micro meaning short term, and we were on a 3-minute scale. So what do we notice? The first 5 minutes it opened, we touch 68.45 and we have a huge plunge down. Very aggressive rejection, engulfing bearish candle there. Now we have also very similar bottoms here. So it didn't really want to break below 25. So every time the stock or the index came into this range and consolidated, bulls are pushing it higher. Every time it came above this range, let's say 68.40 and above, it kept getting sold down. So I always tell my members we don't like too long breakouts. A lot of people, what they'll do is they'll wait right before it breaks out and they'll buy calls right there at the top, which is the worst thing you can do. The IV, the premium is going to be absolutely juiced. You're buying at the worst point. You're paying the highest premium on the day. So what we do is we fade the breakouts and we long the breakdowns. Now, as we go into the options alerts, we see 2 minutes later, 68.30 put super lotto tight stops at $5.30. Now, what does that mean? When I say super lotto, that means the contract is going to expire at 4 p.m. worthless if the put is not below 68.30. So 11:30, you really only have about 5 hours. It is super short term. It is highest possible risk you can buy on a contract. It's Friday, last day of the week. Premiums are going to get crushed into the last 2, 3 hours of the day. You have to make sure that if you're playing SPX, you are expecting to lose all of your money. That is why we call it a lotto, like a lotto ticket. You scratch it off, you expect to lose every single time. That's exactly how we view SPX 0-day expiration contracts. Other people have different strategies, different mindsets. That's completely fine. For me, this is the highest risk, highest reward vehicle that you can have in the market. Now, going back to the actual underlying contract chart. Now, we went to SPX. How do we pull up that chart? We go to SPX. We saw exactly the breakdown that we gave you on the analysis page, and it rejected perfectly. Okay, again, the high a day was 68.45. The high on this candle, 68.44.32. So what were you risking? $1.50, maybe 150. And if we got that quick break, we cut. I mean, it's a very, very high quality setup, and it went straight down. Okay, you had incredible action, little bit of consolidation, barely even a bounce, more like a dead cat bounce into that support, and then huge rejection back down. Pretty much one-way action for about 30 minutes straight. Okay. It's about 30, 35 minutes straight. Okay. So really, really high quality setup, perfect execution here. Then we go to the options chain. We go to 68.30 put. We right click, copy. We go back to the chart, click in the window, control V, paste it, hit enter. And now you have your contract chart on the day. So now when we go back and we see where we entered at 5:30. Why did I enter at 5:30? Well, I pulled up the chart and I saw right here where it bottomed, had a huge pop all the way to about 12 and change. Okay, this was 10:42. The low here was 570. So it went from 570 all the way up, they ran about 100%. Now we come back into that resistance, which we just showed you on the chart. We come back right into support here, right? It gets one little false break quickly and then rockets back up. Once we get that big push back up, I would say maybe these candles right here, the buying, the big volume that comes in. As you could see, there was a lot of buying here relative to selling in this whole section here, a lot more green than red. We now entered with a very tight stop. So $5.30. What were we risking here? I mean, barely anything. 474, you're risking maybe 50 cents. If you want to be a little extra conservative, you come down maybe 450, 460, you're risking maybe 65 cents on the contract. Okay, so if you're buying a $5 contract, you're risking maybe 10 to 12%. You're risking 50, $60. It's absolutely nothing. So this entire trade setup, even if it didn't work, did not really affect us. It would not matter if you had a small account, a large account. It's irrelevant. You bought one contract. You were only risking at max if you want to put your stop at 430 from 530. You risked $1. Not a big deal. So very, very tight setup there. The stops were outlined. Everything was broken down perfectly for you. Now, I sold way earlier. As it got to $9, $10, I was out, right? I made almost a double very quick. It was one-way action up. I had no idea that it was going to go and break the low a day. I almost felt equally on both sides. Like you have to be careful here because we didn't break multiple times throughout the day, right? We tried to test this range. It popped. Let's see, once, twice, three times, four times, right? As it came back into this range here, I was thinking about what I just mentioned earlier, right? Kind of that demand zone here where it's getting bought up. So I was a little cautious when we started to see it pop back off this range. I wasn't sure if we were going to get that break. And as I mentioned, we don't want to buy calls for the stock to break out. We don't want to buy puts here for the stock to break down. So I was just being a little cautious, being protective of my investment here, and I have no problem doing that. I have no problem selling early. We had an incredible flip, 5 to 9 very fast, 5 to 10 very quick, almost a double. Then it ends up going all the way to 20 plus. Okay. So that was the trade. Very short, very simple. If you held, congratulations, you did fantastic here. The only other thing I would kind of put a little pivot is right there at that low. So 68.09. We saw that kind of solidified that short-term bottom into the end of the trading session yesterday. So imagine we just kind of drew a line across here. You could see this is kind of where it bounced. We sort of came down, bounced into close, and then we came down here, bounced, came down here again. Now we're trying to bounce. So this 68.10, 68.09 is micro support. If we blast through this, I think we probably come right down to 67.89. Okay, so that's why I have an alert set there. As you can see, the market's trying to reverse, little 1 minute hammer and then green candle here. So I wouldn't be shorting into this. And the reason why also is even though we saw this big plunge down, the market's only down 10 points. I mean, SPX could easily pop 10 or 15. Now it's back green and then it rips into the end of the day. We just don't know. Or, like I said before, it breaks this low and then comes down another 15, 20 points right here. It can easily come down another 20, 22 points here if we give out that 68.10. Okay. So a lot of opportunity in the market here. We want to take the profits, appreciate the opportunities that the market's giving us. We don't want to be greedy. We don't know exactly where the top and bottom is going to be. It's an educated guess. It's a highly calculated decision. That's exactly what we did here. So again, just to give you a quick recap here, when we go into the Discord, we had the analysis page here where we gave you the technical setup, which is exactly what this channel is for. We showed you sort of this triple top intraday, very micro, which was only 2 hours of trading, 3 minute chart, 1 day, 3 minute. And then we go to our alerts, gave it out. $5.30, gave you all of these alerts on the way. $7.50, $9 here, 9.80. I said if we break this range, could go 12 to 15 easy, maybe even 20 plus. I said that at 11.34. We bought the contracts here at 11.26. Okay. So not but 8, 10 minutes after that, contracts already did a double. All right, so now we broke this range here. I was saying puts are officially 100. Have a great weekend. We'll update if we break low a day. And that's where I was being hesitant, right? The contracts were 10, 10.50. I was like, okay, maybe we want to sort of sell here just in case we kind of get that dead cat bounce and the contracts go back to break even. In this case, it's sort of chopped at this range. It didn't really have that big reversal. So again, could have held those with ease. 13.90, 15, and then again 22.50 from 5:30. Just really, really incredible stuff you guys held. And again, if you want to join us, you could head to our website, avidcapital.co/discord. Sign up. We'd love to have you.